Happiest Minds because they reported a muted set of Q3 earnings, with company's EBITDA taking a hit while margin also contracted. The company has maintained FY24 guidance at 12%. My colleague Reema spoke to the MD and CFO of the company, along with Joseph Anantharaju, who is the Executive Vice Chairman and CEO of Product Engineering Services at the company, and began by asking Venkat about their guidance of organic growth. Listen in.
Yes, Reema, we are holding on to that guidance as of now. Yes, we do realize that it means about 4% of growth that needs to be done in the next quarter on a constant currency basis. And we have to also make up for, the base effect. Last year, we had an acquisition in the fourth quarter. So yes, these two are to be taken into account. The pluses are we had an extremely short quarter in Q3, 60 working days, and a little bit of furloughs and holidays. So with 63 working days in Q4, we are likely to make up for some of that. So the effort is on to meet the 12%, but like many other companies, we didn't give a range. We just said 12%, and it was 11 to 12%. I think this would not have been a question, but yes, the effort is the now and here is to make sure that we try to hit that number.
So you're saying the new guidance is 11 to 12% versus 12% earlier?
No, it is 12%.
Okay.
It is 12%. We are holding on to that, and we'll try to see how we can do on that count.
Joseph, we were chatting with LTIMindtree, and they indicated that the furloughs in Q3 were deeper and wider than what they were anticipating. Talk to us about what we've seen in the quarter gone by.
I would say that the furloughs for Q3 were for a little longer period than we've experienced earlier. I think the furlough started probably a week earlier than we've seen, and Venkat also alluded to furloughs being one of the reasons why our performance was a little lower than what we would have expected to be in Q3. On the other hand, what we've seen is all the furloughs that we had, they got regularized and people were back on their assignments by early Jan. And as of today, we don't have anybody who's on furlough, which is the positive part of this whole thing.
And what about Edutech? That's your largest vertical with a revenue contribution of 24%, and that has seen a sequential decline. Is it purely on account of furloughs, the decline in Edutech, or is there any other reason?
So, if you look at it, I'll give the answer on a couple of fronts. If you look at Edutech, there are 3-4 subsegments: higher ed, K-12, workforce development, and corporate learning. And higher ed continues to be a little soft. One of our customers, so that is at a systemic level. But specific to Q3 performance, one of our customers, a large edtech company, they sold a part of their business, and the product that they divested was a product that we were working on. There's been a little bit of uncertainty because of the divestiture, and as a result, part of the team ramped down, and we're looking at how to bring this back, working with the company that has acquired this product, because there's been a gray period when the divestitures happened and when the company that's acquired these products, they get started off. We're hopeful that we should be able to regularize, this drop-off in the next couple of months.
Venkat, Hightech and BFSI has recovered for you after a soft Q2. What led to that, and have we seen the worst of BFSI and Hightech from an industry point of view?
So if you look at, I'll take that, Reema. If you look at BFSI, I think what helped us out in the quarter was one of our larger customers in this space. The initiative that we're working on, the two initiatives that we're working on with them, one is modernization, the other one is on their data analytics space. And both of those, they wanted to release new features or products to their customers. And as a result, there was an uptick during Q3. We hope to see a similar uptick. We have quite a few customers in the BFSI space that we are in discussion with, both cutting across geos, in fact, India, Middle East, and in US. So we are hoping that some of those would convert. On Hightech, while the revenues have been look stable, I think the segment as such is still being very cautious, and the number of opportunities or discussions we're having in that space is not at the level that I would have expected, and we expect it to still continue to be flat. Is the prognosis that we have for Hightech.
Venkat, any green shoots in discretionary spending, corporate behavior, decision-making cycle? I know it's been a tough, calendar year 2023 for the entire industry, but as we enter the new year, are there any green shoots?
Ideally, during this period, we would get to know about our budgets for the next year. But like Joseph was mentioning, as we go and talk to customers, which most of it, the business people are doing, we are getting a feel that things are getting slightly delayed. So that's the sense that we are getting, but they are back into spending, given the way the US economy is now slowly, I can't say limping back to normal, but at least this now apparently the soft landing has happened and there is no more recessionary talk, and the interest rates and inflation are stabilizing. So as the largest market, these are things that our customers are taking into account and looking at the numbers going forward. As far as the Indian market is concerned, that's showing real good growth in line with what we are seeing in the economy. And as a market, after US, that's the second largest market for us. And that's showing decent traction with at least 3 or 4 of the new logo sign-offs that we have done this year, coming from India and from verticals like manufacturing and industrial, which are doing well for us.
And what about acquisition? We've been waiting for an acquisition from you. Is it likely in Q3 or is it going to be pushed forward to H1 of FY25?
We have a decent pipeline right now. We're in discussions, deep in discussions. And, the idea is to close something which makes sense for the company, is aligned, integrated with what we are doing for our customers. So we are in discussions. We have a decent pipeline, names getting added. Just like discussions with customers, sometimes discussions with prospective targets also take longer than usual. That's what we are seeing right now. But we are in active discussions and hope to come back to you with good news this quarter or early Q1.
And one final word, Joseph, 20 to 22% margin guidance, does that stay even going ahead? You've been beating it for the last, I think, 14 quarters now in a row. But would you like to revise it higher?
I think we would like to stick to the 20 to 24% margin because we want to give ourselves a little bit of flexibility to make investments where they're required. And as we mentioned in our press release, we've initiated several strategic initiatives around creating the generative AI business unit that we talked about last time. And we want to make sure that we invest appropriately. We've got very good traction already. We have around 25-30 customer conversations that we've had. We've had several POCs and consulting assignments that have already been kicked off, and we've got a good team in place that we've trained. We have the NN sales team that we are creating, which will act as an engine of growth, but will need a little bit of investment upfront. And again, we're getting into verticalization, and all of these, we want to make sure that we don't shortchange any of these initiatives. So we'd like to retain that 22 to 24% guideline, with the hope that we will continue beating it as we have done for the past 15 or 16 quarters.
Well, that was the management of Happiest Minds. The stock taking a bit of a correction, almost 4.5% lower after posting a soft Q3. But let's now slip into a short break. On the other hand, Samit Chavan of Angel One joins in with some technical analysis.